All right, this is going to be the weekly forecast for the week ahead. I know I'm live streaming, so if you tune in, I appreciate it. But for the most part, it's going to be a more or less recording for those who obviously can't watch it right now. So this week, ending off of what I saw last week on Friday, it's pretty interesting, to be honest with you. I think if you look at the intermarket relationships and how things were traded to on Friday, it's going to be a very interesting week ahead and the following month. So we're now moving into February, which is typically a lot cleaner price action in terms of seasonal tendencies, and what ICT guides us all to look for is to start trading the second week or the first week of February. So that's the reason why you can see him trading in the Robbins Cup now, now this upcoming Tuesday. So I want you all to take a look at all the things I'm going to be looking at and try to draw a conclusion as to what you believe is going to happen. Because I think Friday was a huge tell for me personally, because NQ, ES, and YM all were moving in sync with dollar index, and bonds and yields were telling something different. So when you have a situation like that, either it's telling you that the market is decoupled, it's trying to do something differently than what you're actually seeing. So it may not actually be true. There may actually be a false run, which is what I'm looking at on NQ, is if that was actually a really false run. So I see you guys in the chat. I appreciate you, but I'm going to try to focus on just doing this forecast. If you look at bonds and you look at yields and you look at dollar index, you're going to start to see kind of the correlation between them and what we're kind of looking at in here. So bonds, they move oppositely correlated to dollar index. And if you look at Friday and kind of what we did on Friday, bonds dropped off lower. Okay, so we had a lower movement on bonds. So on the 5-year note, we had a lower closure on the daily. 10-year note, lower closure. Now yields are going to do the opposite, or they're going to be moving in sync with dollar index, right? So if you look at yields, we have the 30-year, we moved higher. If you look at the 10-year, we moved off higher. And if you look at the 5-year, we also moved off higher. And if you look at the lows in here between the three, that's a bullish SMT. So we have yields moving off higher, and we have dollar index moving off higher. So those are both in sync, but bonds moved off lower while NQ, ES, and YM moved higher. So think about that for a second and think about the correlation between them. That doesn't match up, right? Dollar index, if this is moving higher, NQ, ES, and YM should not be moving higher with it, especially with the volatility that we got on dollar index. They should have not. It's not that they can't, but that's telling you that there's some type of decoupled market. There's some type of crack in the correlation, right? So that's a huge tell for me going into the week when I'm looking at it. And it's the reason why, even though on Friday I could see the draw on liquidity on NQ, everything that I was looking for was traded to, but the fact that we had this decoupled market was making me weary of the idea of pushing along an NQ. It's part of the rules, right? Because if dollar index is significantly moving higher, I'm not trying to long NQ. I'm not trying to long those. And if yields are moving higher and bonds are moving lower, that's telling me, okay, well, something's off here. Something's not correlated, right? So for those who only pay attention to NQ, who only pay attention to one asset class, well, obviously this is not going to make a whole lot of sense to you, and you're going to be like, well, I don't really need this. This is stupid. I think you have a very limited field of view, and you're not taking in enough information, because when these are moving in sync and the asset classes are correlated, you're going to have a very wide scope and view and a lot of confluences to your trade ideas. And it's going to protect you from a lot of losses. It's the reason why I look at all these things, because they are helping me to not take losses, right? It's the main reason why in live streams I'm going from NQ to dollar index. I'm looking at other things. I'm looking at the SMT divergences. I'm not just looking at NQ. I'm not just looking at a 5-minute time frame, a 1-minute time frame. Sure, you can get scalps in there. You can do your thing, but if I want to be an analyst, if I want to read the market, I want to see the rhythm and the flow and what everything's doing, then I need to be looking at everything. So hopefully that makes sense, is what we're doing on a weekly forecast, and even throughout the week, you need to be monitoring all of these things. And if you look at dollar index in here, we've been monitoring the weekly time frame. And if you look at it, back in July of last year, we took out sell side liquidity. We dropped off lower, expanded higher. And this year we dropped down, probably the end of 2023 as well. We dropped down into this inversion. Now, in order for me that I wanted to look for higher prices than NQ and everything else, I really wanted dollar index to respect the bearish order block in here and the fair value gap. So if you look at it, we closed above it, and what have we been doing? We've been utilizing this as an inversion, so we're constantly referring back to it. So going into this week, I'm expecting dollar index to gravitate higher and dig into the remaining portion of this fair value gap here. We have a bearish order block here as well. And if you look at the new monthly opening and where we're standing on a monthly time frame, is we have this fair value gap there. So I'm trying to determine and gauge whether dollar index will reject off of this, and I'd have to see a confluence with yields. I would have to see a confluence with bonds, and I'd have to see a confluence with NQ and ES and YM if those are going to be in sync. But otherwise, I don't have a clear view, because to me, if dollar index should have, if it was really bearish, it should have rejected off of this fair value gap in here in this order block, because we've already revisited. Yes, that is a balanced price range. We've already expanded lower. So in here, we should have already respected this area, because we've gone up into this fair value gap once before. Particularly revisiting that area is not, it's not a good sign, because on the flip side of the analysis is all we've done is drop down into a discount, right? From this dealing range low to that high, we dropped down into a discount. The optimal trade entry, inversion of fair value gap, and we're expanding higher. So could this be a long-term move on dollar index where we expand all the way up into the buy side liquidity? So what would that mean for NQ and the other indices or indexes? What would that mean? That would mean that those would start to drop off lower, and I'd have to see the confluence with yields. They would be moving higher, and bonds would be moving oppositely. They would be moving off lower. So currently that's what's happening. Besides NQ and the other indexes, they're not. So are they just falsely having a run higher, and then this week do we see a drop lower? That very well could happen. So you have to keep an eye on that. To me, this is not clearly one-sided to me in terms of all of it correlated. So really what it means is we're in a semi-decoupled market, and I believe one of these assets is really leading the charge in here. And to me, it's dollar index. Dollar index is really leading everything. So if dollar index wants to continue to trade off higher, then we have to keep watch on NQ and yields and bonds and see if those continue to be correlated with them. So does that make sense, what we're doing and what we're gauging? In terms of the daily time frame, we have this inefficiency that's still left open. So in my eyes, this is going to be my first target. I'm not going to be calling for overzealous targets like looking for the highs up here. That could potentially happen over another month or two where we see dollar index. If you look at it, looks like a market maker buy model to me. But I'm not going to be overzealous with it. I'm just going to play it week by week, day by day. But in terms of just getting an overall read, it's what we could see. And what does that mean for everything else, as I keep reiterating, is we'd start to see NQ, the other indexes, drop off lower. So to me, if you're looking at this, I'm just giving a semi-analysis, is original consolidation, accumulation, reaccumulation, smart money reversal, low risk buy, first stage distribution, second stage, and then we attack buy side liquidity above here. That's what could happen, right? That's what I'm viewing, because to me, if we were really to sell off on dollar index, we should have already respected that area of inefficiency on the weekly and the daily and traded off lower, which we haven't. So we've been inside of consolidation for a long period of time. We finally closed above that consolidation on Friday. So to me, dollar index would want to revisit this area of inefficiency. How we trade inside of that will be a tell. If we just start to continuously keep pressing through it, then it's clear view to me we're going to want to attack the buy side liquidity there. And then it would make clear view to me that we would be looking for shorts on NQ and everything else. So I'm not trying to be overzealous on it. I'm just looking for the near drawn liquidity for me. And for those who constantly ask me all the time, how do I determine bias? How do I determine narrative? I don't get it. Pay attention to what I'm doing. Pay attention to what I'm saying. This is how you're building a narrative and a bias. And you're seeing if things agree with each other. That way, when you go into a session, you can look at your correlated asset, whatever you're trading, and you can get into sync with it. And then the only thing you're doing is you're either looking for longs or shorts with whatever the bias is and whatever you're agreeing with. For those who say that you don't need a bias and you don't need to look at higher time frames, and you don't need to look at intermarket relationships, I mean, it's fine. That's your opinion. But again, I think you're having a very limited view on what the markets are doing. And if our own mentor is doing this, which he probably doesn't go over a lot, which he has, that's the reason where I've got this information, but you need to be doing this. I mean, if you want to be a very high-end analysis trader, whatever you want to call it, I would I would learn how to do this. And obviously I'm teaching you all how to do it. If you look at just the daily time frame in here, we have this BISI that we've been basically consolidating inside of. If you look to the left of you, this was a SIBI that turned into an inversion. And particularly all I'm really going to annotate in here. You can annotate the entire inversion, but this small volume imbalance, look how we referred back to it, right? So inside of that BISI, referred into the volume imbalance. If you look underneath it, this fair value gap. So what am I doing? I'm seeing what side is it respecting. Is it respecting bullish PD arrays or is it respecting bearish PD arrays? Well, to me, it's respecting bullish. It's disrespecting bearish. So what is order flow telling you? It's bullish. So what should I be looking for? Higher prices. CJ, how do I determine bias and narrative? How do I figure that out? I just told you. Is it respecting bullish? Is it disrespecting bearish? Bingo. That's it. It's simple. So we have this down close candle here after the closure on Friday. See if tomorrow or the next day we reach down into kind of the wick there. You could annotate kind of the open as well. So those two areas, if we reach down into it, expand above the buy side and reach into that inefficiency there. So that is how I'm gathering my data on dollar index. Okay, so if you have seen, I haven't even looked at NQ yet. For all of you that look at NQ immediately and you're just trying to gauge, it's like, to me, again, you're limiting your view. The first thing I started out with was yields and bonds, and then I went to dollar index. Like I didn't even go to NQ. The next thing I'm going to do is I'm going to look at other correlated things like Forex. So Euro, if you guys don't know what that is, Euro USD is absolutely correlated to dollar index. So if I want to get an even more better read on dollar index and I'm trying to gather more information on it, then I'm going to look at Euro and I'm going to be like, all right, well, what is Euro trying to do? To me, Euro is going to want to reach lower. So what does that mean for dollar? Dollar is going to want to reach higher. If you look at it on the weekly time frame revisited, this is a balanced price range, but I'm just going to annotate this fair value gap. Extended out, balanced price range. What did it do? It reached up into a premium on the weekly. From that dealing range high down to the low, reached up into the premium. And guess what it's doing? It's no longer respecting bullish PD arrays. Because what was this? Bullish order block in here. These two down close candles actually. And see how it's trading through it. It's traded through the mean threshold. Anytime you have an order block, a breaker, a mitigation block, and it starts trading through the mean threshold, that's telling you something. That's indicating to you that it's probably not valid. Looking at the daily time frame on Euro, what is it respecting? What is it disrespecting? Well, let's look at the bullish fair value gap in here. Is it respecting this? No. What do we do after we close underneath it? We utilize it as an inversion. What are we doing here? Respecting a bearish fair value gap. Same thing here. Weekly. It's the higher one up there. What are we trading to? Sell side. So what does that tell you on dollar index? We're probably going to continue higher. So to me, it's very clear that euro is going to drop lower. If the euro is going to drop lower, that means dollar index is going to move higher. What does that mean for NQ? NQ is going to move up higher. Or lower, I'm sorry. Jeff, mean threshold, is it wick? No, it's body to body. And if you look at everything on the left side of the curve for euro, there's nothing else in here that a price should reach down into. Right? We've already rebalanced this fair value gap. It's just another area that price could reach into. But to me, it's not inefficient. It's already been traded into, right? So the only thing that's left is the sell side that's resting down here. And if price has no other bullish PD raise to reject off of and move off higher, it's pretty clearly one-sided to me that it's going to want to reach off lower. And that means dollar index is going to want to reach off higher. So I'm utilizing all this information. You can look at pound and the other assets, but I'm only really going to use euro just to gain a little bit more clarity on dollar. Okay, now we're going into NQ. So for all of you that sit down on a weekly forecast before your week and you just immediately, the only thing you look at is NQ and that's it. It's like, man, you need to do the right things. You need to look at everything else and figure out really what the market's trying to do, because they're all correlated. They're all moving in sync with each other and they're all telling you a story. You have to read it. Otherwise, you're reading one chapter of a book that's very large. Would you do a granular video on bonds yields and recommend? I mean, right here, man. I mean, this is the same question I get at. I'm just utilizing you as an example. I don't mean this, particularly on you, but I get this question a lot. Can you make a video over narrative and narrative and bias? It's like I'm teaching you how to do the narrative and the bias right here on the live stream. Same thing with yields and bias. I'm teaching you right here. I don't need to make a video because I'm teaching you right here, right now. So just write down the notes, go back through the video if it doesn't make as much sense. Just keep watching the weekly forecast. Keep watching my videos. Eventually, you're going to understand it. I don't mean to be targeting you. It's just I get the same questions a lot over, things I'm already going over. I'm already teaching in real time. It's like just utilize that information. So on NQ, we got above all-time highs, right? Casper, I'd love to hear that. Amazing. Again, what are we starting out on? I'm starting out on a monthly time frame. So what am I doing? I'm trying to draw a conclusion on narrative and bias. Where does your narrative and bias come from? It comes from your higher time frames. Why? Because they're the parent. So on an NQ, I have the adjustment on. That's how I'm trading it. Some people have a different view, but that's what I'm looking at. We got above the all-time highs. And if you look at the monthly time frame, reach down into this inversion, we expanded higher. I'm not trying to call a top on NQ, and that's the reason why I'm utilizing the other information like dollar index, yields and bonds, and Forex to see, is this truly the top? Is this truly what we're going to do? I'm trying to determine that because I'm not trying to predict that. I'm trying to anticipate that with enough information. The weekly time frame is, if you look at last week, we have this SIBI that we closed above, and what did we do? We touched right down into the premium end of that, right inside of this fair value gap here. So far the order flow is still bullish, but I'm being weary of the idea of pushing continuous longs on this because of the other information we just gathered, right? So it's kind of conflicting. It's a conflicting analysis, and I'm trying to see which one is really true, which one is really trying to tell the story, because there's going to be times when price is conflicting, that they're not agreeing with each other. What does that signal for you? Do not push price. Do not push your analysis. Sit still. Wait for clarity. Those are type of things that you have to understand, is when things are not agreeing, when they're not in sync, when they're decoupled, that's telling you not to push price. That's a signal. At least for me, that's, a red light. Hey, chill out, CJ. Just wait for more information. So if we drop down into a daily, refine the weekly, we have this fair value gap here, right? We drop down into the CE of it, inversion from the weekly, and we expanded away from it. On Friday, we dropped down into this volume imbalance here. So just into the premium end, and then we expanded away from it. So we have a buy side liquidity resting here. We could want to run that out. Even in a decoupled market, price can still expand. Like let's say, dollar index continues off higher. NQ would still be allowed to move higher. I just don't know for how long, because eventually it's going to move into sync with it. I just don't know particularly when. And to me, that's telling me probably to sit still and don't do anything. That's just the way I'm viewing it. Because eventually it's going to move into sync with dollar index. If dollar index is truly, truly bullish, it's eventually NQ would drop off lower. Or a move into consolidation. That's another aspect of the correlation. So have to be aware of that. If you look at the 4-hour time frame, we drop down into this fair value gap there. And I'm keeping the weekly, drop down into the premium end of it. And I thought this was very cool. I'm actually going to delete a few of these things. Just looking at simply new day opening gaps and new week opening gaps. I mean, it was pretty beautiful. This was a new day opening gap from Wednesday. Utilized it. Look at the bodies. Expanded higher. New day opening gap in here. So there's also a small volume balance. Old new week opening gap. Carry that out. Look at where bodies just stopped. That's not a coincidence. That was last week's current new week opening gap. And then this was Friday's new day opening gap. So we got above relative equal highs in here. Now we built up a little bit more buy side liquidity. If dollar index was moving off lower, it was clearly one-sided moving lower, I would be fairly confident on looking at longs and looking for the buy side to be tagged. But the fact that it's not, the fact that it's out of sync with it, and it's decoupled, would make me weary of the idea of trying to push longs. And it's the reason why you saw me on Friday being weary of pushing longs on NQ, because of that simple fact, right? And bonds and yields, they were out of sync. So you have to be paying attention to that. It's part of my rule set, and it sucks at times where that's where discipline comes into play. Is discipline's a bitch. I talk about this all the time, where I just have to follow my rules and my system. Even though I could see the drawn liquidity, even though there was clear entries, it's just still, to me, was signaling me not to do anything. Okay, so if we look at the lower time frames in here, we drop down on NFP. Very classic pattern. I even annotated the AMD accumulation, manipulation, distribution. Happens almost to a T every time on NFP. It's fairly easy to spot. But we drop down into this new day opening gap. If you take this all away, what is this SIBI here? That would be your inversion. Drop down into that, which is residing inside of this BISI here. CJ, what makes a high probability fair value gap? Well, there's multiple examples, but what's one of them? When you have an inversion coupled with a fair value gap that's targeting the bias or the narrative drawn liquidity. So anytime you have an inversion coupled with a fair value gap, that makes it a high probability one. As far as everything else on lower time frames, I'm not going to annotate it. I don't, to be honest with you, I'm neutral. I see the drawn liquidity. I could see where price would want to draw to, but due to $2 index and due to yields and bonds and everything else, it would make me weary of trying to push it on a Monday going into tomorrow. So be aware of that. Let's look at what's the next thing on the agenda for me. Next thing on the agenda would be looking at just SMT in general and looking at where things traded to on Friday and where they're at. So if you look at all of these are particularly all relatively in sync. They all made higher highs along with each other, but we have a high back here on NQ that we do not have on ES, so in YM. So I'm just curious to see if NQ would want to run that out. What I wanted to annotate on ES at least was Let me see if I can open up ES here. What's up, my brother? Good to see you in here on a Sunday. If you guys are just tuning in, I would recommend going back through the first probably 10-15 minutes of this, because I just went through bonds, yields, dollar index, and kind of gave the clarity as to what I was looking for on NQ and why I'm a little uncertain on it. As far as ES still has buy side that we could run towards. I have the adjustment on. If you don't have it on, it's going to look like we're trading at all-time highs. Personally, I have it like this. So ES may want to gravitate towards that. It may want to run the buy side out first. And if dollar index continuously gravitates higher, then from there, do we see a drop lower? Very well could happen. There's just a lot of things. We haven't. Let me look at the agenda for the week as well. So this is my time. Christina? Yeah, I'm actually just seeing that. Interesting. So Powell speaks today, for me, about 5 hours from now. So I'm curious to see how that plays out right at the open of this week. Tomorrow, this is 30 minutes after the open. We have just one red folder. Tuesday and Wednesday, a couple medium impact news event drivers. Thursday, one red folder at 7:30, unemployment. And then Friday, nothing. So not super high impact this week. Could make things pretty interesting. Like I said, I'm going to have to wait for a little bit more information because dollar index is a huge tell to me. It's screaming to me that something's a little off, right? As I described before. Because if dollar index wants to reach up into this premium SIBI, then that's going to put a halt on me trying to push longs on NQ and ES and everything else. And that's as simple as I can put it. Like I said, I'm not going to go too much on a tangent. I mean, that's really it for the weekly forecast. I mean, I can't look at anything else further than that. I just have to wait for more information and see how the week plays out. Rick, go back on those video and go through the first whatever 10-20 minutes because I was going over dollar index bonds and yields. I think that's going to be it for today as far as the weekly forecast. I hope you guys have a very fruitful, good week. I will be live tomorrow, 15 minutes before the open. Until then, good luck and good trading, everybody.